Porinju Veliyath joins us, Managing Director and Portfolio Manager with Equity Intelligence India. Porinju, it's been a while so welcome back and thank you for joining us. Well, last time when we spoke to you, there was a carnage. There was a messy sell-off in mid and small cap stocks. What is your view now? Do you think that summer correction, which was a very sharp correction, is behind us?
I strongly believe so. Because this was a very big sell-off, and some correction was definitely due because of the overheated small and mid caps earlier. It was going on for something like 4 or 5 years of rally, whereas the blue chips underperformed, if you feel that way, in general. So when it was done, it was overdone, and I feel it's an ideal time. It's a great situation today to explore values among the small and mid cap companies. When we say mid cap companies now, according to the new definition, even companies at 28,000 crores, 30,000 crores valuation, they are mid caps and wonderful companies. And with some of them are industry leaders in this country with a relevant business model. So some people, they say, no, don't buy those things. You buy only the highest quality companies today at 100 PE, 80 and 70 Ps. I don't agree with that. See, it's a cycle. Everybody has their cycles and their opportunity. Now, those who underperformed last 5 years are performing last 6 months. So that doesn't mean this is a strategy to adopt. Maybe this is the peak of the strategy right now. If you are buying, something like a Liver or a Nestle or what is called Britannia or a Page or Asia, this kind of very high quality companies at 70, 80, 100 Ps. That's what a lot of people are doing today. So it will be like buying the mid caps in the November, December last year.
Hi Porinju, morning, and firstly a special thank you. I believe it's been pouring heavily in Kerala, but you still managed to find time and speak with us today.
Yes, Aisha, good morning.
Okay, Porinju, let's leave whatever's happened behind us and let's really look forward. When we talk about the quality of the market, while you're celebrating and joyous that the index is sitting pretty, and I'm talking about the Nifty and Sensex, the other thought is that it's only a concentrated few which have taken us to the top. But you believe that the market is going to get a little more broad-based than here, and it's not going to be those select few 15, 10 odd stocks which are going to move. The rest of the index stocks as well would play catch up. What makes you think so?
See, this is a lot of herd mentality also works in the market. When there is a sector or a segment wise now, small cap and mid cap moving down and the large cap blue chips moving up. So everybody jumps into the bandwagon and makes it a dirty place. So this is what exactly happening today. And there are very high quality companies of the past 15, 20 years. They have done exceedingly well, maybe 10 years. And their best of times are going on. And the best of earnings happening and the best of margin, the least competition, and those kind of companies quoting at 100 P at today's EPS. I don't understand that. I don't know if somebody really understands, well and good. Expecting that these companies will grow at 20-25% for next 100 years. That's all nonsense. It doesn't work, See, it's a world, so much disruptive world out there. Competition can come from nowhere. So this risk is there in the high quality companies today also. But of course, whatever said and done, I am strongly bullish on Indian markets, Indian economy. I still believe in changing India and improving corporate governance. I still believe this is the best theme to continue to play for Indian markets. That doesn't mean just go and buy any fraud or companies. See what I'm talking. Provided there is a very relevant business model for India and the world, and smart. There should be high business value in the company. Then only we should bet on improving corporate governance. If that was the reason for lack of wealth creation in the past, see, there are real clear symptoms that India is changing. Structural economy is changing. We have been talking about this, this unorganized economy to organized, from black to white. This has long-term, impact. Positive impact on a lot of companies. Now we saw I think the Bhushan Steel, the promoter's part, somebody was arrested yesterday. These all are very, very important. There won't be incentive to remain unprofessional, siphon of money, which I have been talking all the way. And it's happening in many companies. In my own experience also, there may be few companies doing badly in our peaks, and that is what is projected today in the social media. But there are companies doing wonderfully, and I have got small caps bought 1 year ago. It is a five-bagger today, and it's an all-time high, where this promoter were considered to be not so professional, and today they are becoming professional. They are showing the profits. They are ready to pay the tax. So this kind of change is one-time opportunity in this India since independence.
Porinju, point well taken. The standard question that I keep getting from viewers over the last few sessions has been that at an index level, we are talking at 11,500, we are talking 12,000 for the Nifty, and I know you track the mid-caps more. But, their mid-cap portfolios and small-cap portfolios are not reflecting that euphoria. What would you say to viewers and investors who are feeling a bit confused in the market?
See, the index or Sensex, it doesn't represent Indian markets today, Indian equity markets today. It represents some irrational activity of some certain kind of people. So that's okay. It's also good. I'm not telling any blue chip investment is bad. But if you buy the top quality 10 companies in India today at today's PE and valuations, it may give you 5 to 10% CAGR for next 5 years or 10 years. Because these companies are doing the best in terms of margins, lack of competition, and all those kind of business environment. And at that kind of best earnings, which is above the normalized earnings, you are giving very high PE. I think investors should think twice before doing it. At least the earnings or the return what they make in their investments are going to be disappointing for the next 5 years' time. There will be some companies still giving you 20% CAGR. I'm not telling every company. If you make a portfolio of the top 15, 20 companies, this is going to happen. 5 to 10% CAGR in the next 5 years. Whereas, if you look at opportunities in the mid and small caps, especially after this big sharp correction, you are going to make maybe 30-35% CAGR for next 5 years. And that is the kind of opportunity I am seeing in the markets. That doesn't mean you go and buy any fraud companies, dying companies, irrelevant businesses. You should look at very relevant businesses and where they're medium. I would say another way, look at medium quality companies among the mid and small caps with a relevant business model, which is futuristic also going forward. That is where, after the sell-off, you are getting at maybe 10 PE or 15 PE, some of them may be in single-digit PE. But there are not too many. The opportunities are not like 2013 or 14. Maybe it has come down by 75%. But there are still companies. See, India has only around 1,000 companies with investable quality companies. You have to choose from them 15-20 companies. So that is called stock picking. I think this is a wonderful opportunity to ignore the so-called the highest quality large caps and come to the mid and small caps. Today, mid caps is having a 5,000-6,000 crores market cap, also considered to be small cap, which I don't believe. For me, it's a mid cap. So it depends on your temperament. So I feel the opportunities are immense, and general market is going to continue to be good only. And any further move in the market will be broad-based. Already there are symptoms in the last week. There are more participation happening. And we will see broad-based market move in the coming days.
We have a few excited viewers out there who've sent in their queries, and I've promised to take only sector-specific, no stock-specific queries here. We've got a very interesting query coming in from Girish, and he sent a query on our involve.in message board, and he says, for long-term investing, is banking still a good sector? And Porinju, this is an interesting question considering the turnaround which seems to be visible only in hints, albeit BOB's numbers, for instance, were an impressive set. We've seen the kind of move in ICICI Bank after its earnings, and it seems like, all the bad is already in the price now. Time will tell, of course. And today you've got SBI's numbers as well. All anticipation on street is that it is going to be a strong quarter. Do you think banking should now be looked outside that private banking names, those few Yes Bank and HDFC banks of the world?
Yes, I still feel, if somebody is interested in banking, that makes a lot of sense. Now there are small microfinance companies quoting at high valuations, 5 times, 10 times the book value because of the growth happening. And India has definitely a lot more growth prospects in that sector, especially in the consumer finance, in the retail finance. So this is going to grow in a big way in India. We are so much underbanked or underfinanced, what do you call, in that segment. So I would still prefer, something like now an IDFC plus Capital First is going to merge. Maybe a federal bank kind of bank. We have exposure in federal bank, of course. Recently we have bought after the big sell-off. Maybe a JM Finance kind of stock in the capital market related activity too. So there can be some such kind of mid caps, and of course it is small caps to the some people, which has got less of NPS, more visibility, and good people managing it. That's also important. I feel that way. IDFC Bank plus Capital First can be a stock to watch if somebody is looking for next 5 years, asking about the long-term investing. There is more safety and more growth prospects. And it's too early to write off some of the old generation private banks which are improving in their efficiencies, have got a control over the NPS, and those things, next 1, 2, 3 quarters are very important also. They will give you much more visibility. But once that visibility happens, the stock price could be doubled. So maybe you have to take some chance before the full visibility comes. If you buy, you get at a bargain price.
Porinju, there's another question that's come in from Praveen Rao, and he's asking what is the future. So he's being very specific, not stock wise, but he's asking about the future of specialty chemicals, especially dyes and dye intermediaries. You have a thought here?
I do not follow this much because of earlier it was too much fancied, and valuations have gone through the roof, and they had a great time in earnings. I don't on the present situation, and I don't have that knowledge how this industry looking going forward in the next 1, 2, 3 years. We had Indian companies in this specialty chemicals were all in a sweet spot. Even we made money in companies called Balaji Amines. We used to buy it at 2-digit prices a few years ago. We exited. We are not holding today. A lot of companies, there some of them have gone 5 and 10 times. Now, graphite electrodes, people have been after that. So a lot of fancy is going on. We have a habit of, ignoring the current fancied or too much fancied segments. And we always look for sober valuations in the mid and small caps. At the same time, we have got, in our PMS, we also have got ITC. It's not that we are always into the small cap companies. We have got high quality companies also. Like now TTK Pharma or, Hawkins. A lot of great companies. Now, Kai, I consider it as a very high quality company, which you have a large exposure. I'm not recommending these stocks. What I'm trying to tell you, see, the high quality, high PE stocks and the value stocks with the medium quality. This is the game now. Which one you want?
In general, do you think, Porinju, that you need to now have a slightly greater weightage towards large caps and mega caps, because the 4-year clean one-sided bull market in small and mid cap stocks is coming to an end? I mean, earlier 99% of the small and mid cap stocks have went higher, and good investors like you are able to identify stocks which have done much better than the benchmark. But now do you think it is time to get not selective but very selective, and that is where there is an opportunity, but that is where I think the challenge is also there?
I see it slightly different. I feel the next cycle is starting for the investable quality mid and small caps. It started last week or maybe in last 2-3 weeks. So another cycle is coming up in that. And people will be not very happy with the kind of return what a Hindustan Lever or a Britannia or a Page and Acer kind of stocks may give. They are great, wonderful companies. The best of companies, the way they created wealth. And these promoters definitely, should be congratulated. The way they created wealth, they are highly respected too today. See, if you remember, at the same time in 2015, Sun Pharma, Lupin, what people are telling you, the best companies, infallible, they can never disappoint you. See, at 1,200 rupees, Sun Pharma was the best company in the country. And today, after 3 years, it is below half the price. So don't think everything is so evident in the companies. So there can be problems coming to many sectors. See, many of these high quality, high PE companies which created wealth in the last 5-10 years, some of them are going to face competition going forward. Today the world is becoming smarter. The entrepreneurs out there are becoming smarter. Many of the family promoted and unprofessionally managed companies or traditionally family managed companies, they are changing into coming to a new growth orbit. They are understanding the benefit of growing with the market cap, creating wealth through the market capitalization. So when these things happen, they will also be advised by the best of talent in this country. They will also go professional. They will also create competition for the good players today. So these certain companies they were in a sweet spot. They had very high margins and growth prospects in the last 5-10 years. So that need not be repeated for next 5-10 years. New people may come up. These companies what we are mentioning, they were all small caps years ago. Now Page Industries was only 500 crores market cap or 300 crores in the starting. So people say don't buy small caps. What does it mean? That means you should not have bought Page Industries at 500 crores.
So for those who have been writing all kind of rubbish about the party in the small and the mid cap stock is over, watch your back, mid and small cap investors will suffer, you would like to dismiss that once again. You are of the view that there is money to be made and serious money to be made in the small and the mid cap space. And one should not look at equities in a linear manner. Porinju, why don't you clarify that viewpoint? I mean, everybody thinks that, equities are like fixed deposits that बढ़ता ही रहेगा.
See, India accommodates everything. Our economy structure is like that. Large economies with a large distribution network all over the country with large global brand, they have an advantage. It will continue to be there. I'm not telling that. But that doesn't mean you buy a high quality company at any price. That is the simple thing I'm talking about. Because if you say an overpriced or higher price than it deserves, there can be 2, 3, sometimes 5 years of stagnation. See, this happened in Reliance. In the previous 10 years, Reliance did not create any wealth because people overpaid at that point of time. And then they had to wait 10 years. From there, the stock went up by some 150%. Even I identified the stock and recommended it at below 1,000 rupees. Now the stock is more than 100% up. So this can happen. This can happen to the best of companies in this country. We don't know. Now, do you have that kind of visibility for TCS for next 5-10 years? I don't think TCS management will be confidently telling you we can grow at this percentage for next 10 years. Things can change. So this is applicable also to the highest quality, most fancied companies today.
All right. Porinju, you've given us some great insights, and I think the one that I take away, and I completely agree with you on that, is that there has to be at some point value at the price that you buy any stock, even if it's a high quality stock. Thanks very much, Porinju, for taking out the time and speaking with us this morning. Really appreciate your thoughts and your insights.